Hello everyone, welcome to the Smart Market Insights here on Kalkine TV. I'm Sage, and today we'll be shining some light on reports that the Australian Bureau of Statistics has released since the interest rate hike. The current scenario is no less than a transitioning phase for the Australian economy after a major shock to global operations caused by the pandemic. The world had only begun to show signs of normalcy. However, this recovery was interrupted by supply chain issues and a re-emergence of infections. The varying factors have led to authorities and policymakers relying heavily on economic data to sense the well-being of its citizens. Another crucial data recently making the headlines is retail trade, which is essentially a metric to judge how well the households are doing. The Australian Bureau of Statistics released data on the economy soon after the cash rate hike was announced by the Reserve Bank. Let's now take a closer look at the latest economic data and what it actually means. According to the ABS data, the total number of dwellings approved fell in March after rising by 42% in February. The drop in approvals is in sync with the decline in property prices seen in Sydney and Melbourne. Additionally, the fall in the total number of dwellings approved in March was driven by approvals for private sector dwellings, excluding houses, which fell 29.9%. In March, approvals for private sector housing also declined, but only by 3%, though approvals for private sector houses increased in Queensland and Western Australia. They fell in other states. Most importantly, the value of total buildings approved fell by 10.8% in March, and among these, the value of total residential buildings fell by 18.3%, led by a 20.7% decline in new residential buildings. The declining housing value points to the visible cracks in the housing ecosystem, including newly constructed houses being valued lower than previous ones. And on the brighter side, however, there was an uptick in public developments during March, with 11 projects valuing over 30 million Australian dollars approved. Now, another set of data reflects the balance on goods and services surplus, which increased by 1.88 billion Australian dollars in March. And on a broader scale, an uptick in the balance reflects that the domestic economy is becoming more self-reliant and depends less on imports. Global supply chain woes have led to lower Australian imports. ABS reported that goods and services imports fell 1.95 billion Australian dollars in March, which amounted to a 5% decline. And at the same time, exports also declined, though by a significantly lower amount of 72 million Australian dollars. A slower inflow of international processed industrial supplies and consumer goods led to a fall in imports. And meanwhile, exports fell majorly because of a drop in non-monetary gold and cereal grains and cereal preparations. The ABS released another promising set of numbers on the 4th of May in the retail sales category. The retail turnover in Australia reached a record high in March after rising by 1.6%. The previous record high level was set back in November 2021, which was 0.8% lower than the current March 2022 statistics. And the data highlights that consumer spending has picked up across discretionary and non-discretionary categories. Additionally, businesses have seen a recovery from domestic headwinds, such as the flooding and reduced business activity. And these factors, along with an evident uptick in consumer prices caused by global factors, have helped push up retail sales in March. Household goods retailing remained strong and rose by a massive 3.4%, followed by other retailing, cafes, restaurants and takeaway food services, department stores and food retailing. Easing restrictions and rebounding consumer confidence were the key highlights of March. Though the Australian economy has been resilient against the global challenges, increased cost of living pressures have impacted households. And unless the upcoming wages data shows any form of recovery, the economy seems to be at risk of losing all momentum in the long run. And thus, many experts have suggested that the wages index released on May 18th, upcoming, would give a clearer picture of the economy moving forward. Thanks for your company on that report, but that is all for now. We will be back again with the exclusive Smart Markets Insights show on Monday. Until then, keep watching Kalkine TV for the latest market updates, related insights. Sage here, signing off for now.